From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for January 29th, 2016. In just a moment, we'll be taking a look at the USDJPY, the US dollar versus the Japanese yen, for today's trade analysis. But first, I wanted to recap a couple of trade suggestions made over the past few days in our morning analysis videos and in the live trade room. First off, starting here on the USD CHF, the US dollar versus the Swiss franc, we've been looking for buying opportunities on dips into the support zone. The yellow shaded area up here at the top right-hand corner of the chart between 101.25 and 101.45 has been our buying zone all week long. If I zoom out a little bit here on the 4-hour time frame, you can see we've been well within inside the uptrend channel that we see here between the blue and the black trend line. We were right in the middle of that area, noting that if it stayed within or above that yellow shaded area that was up here, we would look for the market to continue to pressure higher towards the top of the channel, which is, of course, the orange shaded area at the very top near the 1.0200 level. So all week long, again, zooming in, we can see opportunities to buy on dips into this zone. I'm sure there was a few folks that got a little bit nervous about it as it spiked underneath it here yesterday and pushed a little bit underneath the 1.0125 level. But the market was able to hold this area, and we see the continued rise towards our targeted level into the 1.0200 to 210 level. So if you were in the buys from yesterday, from the yellow zone, you should be closing, protecting, moving stops to break even or better profit here into the orange shaded area. I'm not, of course, saying that everybody would need to close the entire position, but definitely looking to close some profit, if not all of it, here into the orange zone. We've reached our resistance target at the top of the trend channel. So a decent opportunity for profit, just measuring from the top of the yellow zone to the bottom of the orange zone is about 60 pips of profit. But of course, could have been much more seen if you got in a little bit lower, let's say closer to 101.35 and took it higher. You saw 80 to 85 pips of profit. So again, a pretty decent opportunity there on the US franc from our trade analysis videos. Moving over to the euro dollar, just a similar yet opposite. Yesterday we're suggesting going short and selling here into the orange shaded area at the top of our range that we've been discussing, this black box here on the chart. We've been looking for selling opportunities into the top of the range, into the orange shaded area yesterday. If you took those sells, obviously now you've seen support down here into the yellow shaded area. You've seen 50 to 60 pips of profit as it pushed now down into our first targeted level. Again, this becomes a decision zone where you're looking to either close or protect profit from the original sells that you were in from up here at the orange shaded area. Again, it will depend on where you got in and where your targets were. You know, if you got in at the bottom of the orange zone and just targeted the top of the yellow zone, you're only looking about 35 to 40 pips. If you got in deeper inside the orange shaded area and took it into the yellow zone, you're looking at 50 to 55 pips. So there's a little bit of leeway about how much profit you might have made, but it's profit nonetheless. The expectation here is if it can break down underneath the yellow shaded area, we look for the continuation down to the bottom of our longer range there into the green zone. You know, protecting profit, moving stops to break even or better, closing some profit, all a good idea as it challenges here at the yellow shaded area. Next, moving on to the USDJPY, the US dollar versus the Japanese yen. Of course, we had a surprise cut of interest rates out of Japan yesterday, and we can see an extreme market reaction out of this. Now, I know that often it's easy to get sucked into this without really waiting for the right opportunity. You know, think of this like a speeding train going by the market at 100 miles an hour. Often, it's not safe to jump on a speeding train going by you at 100 miles an hour. So think of it like that. What I want to do is wait for the market to slow down. Wait for the train to pull into the train station before you try to jump onto it. What I'm looking for now is a confirmed break of a resistance level. You know, when we're going to buy in an uptrend or buy in an upward momentum, we want a break of a resistance level for the continuation higher. Because literally, by the end of day today, if we get some poor news out of the U.S. or something that causes the market to reverse, we could see it right back down into the 118s and 11900 levels. So be cautious. This is a single candle. It's not a confirmed breakout yet. It is interesting, the 100 period moving average coming here into the chart. We are just above that now. We see back here with the blue boxes on the left-hand side, support there into the yellow zone. So that yellow shaded area, 120.30 to 120.60, highlighted about 30 pips there, is now going to be our zone of support that we're going to watch for the market to hold above, confirm a breakout above the yellow zone. We obviously don't have that yet. The current daily candle hasn't even closed. So what we need is for the current daily candle to close, and preferably a new daily candle to stay above there to confirm the breakout. Now I know that means we have to wait until early next week, but sometimes that's the safest and prudent opportunity, most prudent opportunity when you're seeing such a large dramatic move in the market. We want to confirm the breakout above the yellow shaded area. Now that being said, we could take this down to the 4-hour time frame and note here on the 4-hour time frame that we have seen the market holding above that yellow shaded area. So for the day today, as long as it's above this yellow zone, 120.30 to 120.60, I'm going to start considering this as our support level for the US yen, the yellow shaded area. Any dips back to the yellow shaded area become opportunities to look for rallies back towards the pink shaded area as our next area of resistance. And of course, at any point, if it breaks above the pink zone, that just becomes our next support, and we look for the next target back here to the blue zone. So again, all we're going to do is look for breaks of resistance or dips to support for opportunities to go long here on the US yen. And the change of that, of course, and the risk in this entire scenario is that it breaks back underneath 120.30 and starts to retrace again much of this move that we've seen over the past 12 hours or so for the US yen.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.